We are covering the foundational concepts of risk, peril, hazard, and loss for the property and casualty exam. Understanding these terms is critical because the exam will test you on them relentlessly, often disguising them in scenario-based questions. Let's start with risk. Risk is the uncertainty or chance of a loss occurring. The key thing to remember for the exam is that insurance only deals with pure risk, not speculative risk. Pure risk involves only the possibility of a loss or no loss. There is no chance for gain. Think of a car accident or a house fire. Speculative risk, on the other hand, involves a chance of gain or loss, like gambling or investing in the stock market, and is not insurable. The exam will try to trick you by presenting a scenario involving a business venture and asking if it's an insurable risk. It is not, because it's speculative. Next, a peril is the direct cause of the loss. If a house burns down, the fire is the peril. If your car is damaged by hail, the hail is the peril. The exam will give you a scenario, for instance, a homeowner's policy that covers wind but not flood. If a hurricane's wind damages the roof, but subsequent flooding damages the interior, only the roof damage caused by the peril of wind is covered. A hazard is any condition that increases the probability or severity of a loss. There are 3 types of hazards you must know: physical, moral, and morale. A physical hazard is a physical condition you can see or touch, like faulty wiring in a house or icy roads. A moral hazard involves dishonesty, like an applicant lying on an application or intentionally causing a loss to collect the insurance money. Think of someone with bad morals. A morale hazard is carelessness or indifference to a loss because insurance is in place. An example is leaving a car unlocked with the keys inside because you know it's insured. The exam loves to test the difference between moral and morale, so remember this. Moral is about a lack of morals, like fraud. Morale is about a careless attitude. Finally, a loss is the unintentional decrease in the value of an asset due to a peril. The exam will test you on the difference between direct and indirect loss. But direct loss is the physical damage itself, like a fire damaging a building. An indirect loss or consequential loss is the financial loss that results from the direct loss. For example, if a fire damages a rental property, the cost to repair the building is a direct loss. The lost rental income while the property is being repaired is an indirect loss. A common exam question might describe a commercial building fire and ask you to identify the indirect loss, which would be the loss of business income. Here's a mnemonic to keep it straight. Remember, risky people have losses. Risk is the chance, peril is the cause, hazard increases the chance, and loss is the result. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.